Hey guys, John here with a silver update. Sorry for the dodginess of the cam here. I'm just holding it in my hand while I do this video. Uh, Sorry, that sounded a bit rude, but just holding the camera in my hand while I do this. I don't know if I can get past that now. Okay, I just wanted to hold the camera in my hand while I do this video so I can sort of draw some lines on the chart and just tell you some concerns I have actually about this silver chart. This is the daily chart that you're looking at, going all the way back down there from $17. Seems so far away, doesn't it? And it was. Had this massive run up, $31, and then we've just sort of been going sideways in these last few months now, isn't it? That's sort of the end of the year 2010 around here. We had a weak start to the year, but in the last couple of weeks we've absolutely surged back up, which has been good to see. A lot of people on my YouTube channel, well, not a lot, probably two, are calling this a cup and handle formation here. And what they're talking about is it looks like a sort of a bowl forming here. And they might be right, but I think it's a bit too early to call it a cup and handle formation till it does actually meet the other end of the cup up here. And then if it then just goes sort of off to the side a bit and doesn't really power up through it, but just sort of flags, they call it, off to the side, that will be a cup and handle formation. So it's far from a cup and handle formation yet, although if it were to form one, this is how it would start to form, if that makes sense. But what I'm concerned about actually is, A, we haven't reached that other end of the cup over here at $31, but B, we've got this little niggly doji candle here, the second one from the end, and as you can see, as the candle sort of shows you, we tried to go up, we tried to go down, and we ended flat for the day around 30.25. And generally this is considered a reversal candle if the next day's trading or the next breakout after this candle breaks down below that doji candle. If it breaks out above it, it's a continuation pattern and you go long. So basically the sentiment here among traders is you trade the breakout of the doji candle. But statistically speaking, after a long run up like that, doji candles are traditionally, well, they favor the short side of the market. Now, it goes in the face of sort of everything that I know about the silver market at this point in time in terms of fundamental analysis and just the tightness of the physical supply, but these are what is being displayed on the chart. You can't sort of really argue with that. It is, you can see here as I go to the 1 hour chart, it is tapping on these that support line there, and if it does break down through that, probably not during the Asian session, even possibly to London, but if it does break down there through there in the COMEX session, I'd be concerned about a reversal. Similarly, if it does break 30.55, was that 30.53, we have a continuation pattern. But as I said, these signals do favour the short side of the market if it's been a long run up. So statistically speaking, it'll break down below. But you know, statistics are, probability is made to be broken, I guess. In some instances. So that's just my concerns in the market. And if we do, what concerns me even more then is if we do break down and get a significant reversal down to 28 here, that's quite concerning, because what we've got here then is a higher high, sort of a high here, and then a lower high here. We've got a lower low, sorry, down there, so you can sort of see that it's stepping down. And if we break that low here, it looks pretty scary. It looks pretty scary from purely a technical point of view. You have to understand that when I'm talking charts, I'm not talking anything else but what I'm seeing on the charts. It doesn't sort of hinder my view of long-term silver. I've got to report what I see and what are my concerns. If it does start to break down here, there probably will be a reason for it. You'll know why it is. Probably, if I had to guess, it's probably these emerging economies taking a hit with all the stuff going wrong in the world at the moment, and that's probably why it would do that if it did do it fundamentally. And if that is the case, you may want to consider some sort of hedge, whatever that is, whether it's if you're a trader shorting the market, shorting the emerging markets or whatever. You know, you'll have to figure that out for yourself. If you're just a buy and hold type of person, it's probably just going to be a good time to buy some more. But I thought I'd do this video just to sort of alert you to the fact that yes, we've had a nice backward run up into silver. Yes, we have actually, while I use the word backward, seen some backwardation silver. But again, the charts are warning of something else, and we've got a pretty heavy commitment of traders report. The public is, I think the last time I looked at, the public was outnumbering, the longs were outnumbering 2 to 1 the shorts. So the public is in this market as well, which is also a little bit concerning. So, you know, it's just something to take note of. If I was a betting man, which I am, I would be betting that this market goes down, but I'm not going to trade it, mainly because I've just got conflicting views in my head, and I just don't know what it's going to do here. But chart-wise, not the best looking chart I've seen until it can break out, or at least touch that 31 area, and then get some sort of flag support, you know, not too much of a retrace. That would be the ideal thing in this situation, or of course a complete blow off top. But yeah, just thought I'd let you know about that, guys, and make of it what you will. Talk to you soon.